Hey everyone, DraftKings is an interesting mobile gaming company that offers people the chance to wager on sporting outcomes and play mobile games like blackjack in certain states. The company reported financial results, which I'll review in this video. I'll also update my buy recommendation on DraftKings stock. I've had DraftKings stock rated as a buy for 2024, and I'll update that recommendation in this video and let you know if it's still a buy following these results. So let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the company reporting revenue grew by 53% year over year in the first quarter and increased their revenue guidance midpoint for the full year. DraftKings has demonstrated solid revenue growth, both due to rising engagement with existing customers and expansion into new markets. Now, the two new markets the company launched in recently are Vermont and North Carolina, and the company saying that they acquired customers efficiently at population penetration rates consistent with prior launches and expect both states to contribute positively to adjusted EBITDA for the second half of 2024. In other words, as DraftKings is expanding into more states, I think they've exceeded 20 states now in terms of being open to the citizens in that market. Remember, they need to get approval from local jurisdictions. Each state needs to approve DraftKings to operate in that state. So as DraftKings has gotten experience entering into new states, it's gotten better at that process, right? Every time it enters a new state, it needs to have a promotional campaign, advertising, marketing, to let the people know that they're available in that state. And so initially that's a lot of investment up front, and then it reaps the benefits later on. Well, in this case, the benefits are going to come relatively quickly after just launching. They're going to be profitable on adjusted EBITDA basis in the second half of 2024. So they are getting better at this, which is an important skill because they're still available, I think, in less than half the states in the US. Now, they're not going to get into all of the states, I don't think. For instance, I don't think they're ever going to get approval in Utah, a state that's been, anti-gaming for some time now. And they may never get entry into California, a state that's not particularly anti-gaming, but it is protective of the existing gaming operators in the state, which there are plenty of. There are local horse racing tracks that are protective of their business. There are card rooms that are protective of their business here. There are also gaming operators from Indian casinos that are also protective of their market share. So all of those forces worked together to stop DraftKings when they tried to enter into California. I believe it was in 2022 on a local ballot initiative, and they failed miserably. And so I don't know if DraftKings will ever get into California. And so there may be other states like California and Utah where DraftKings may never get entry into. Still, it is making good progress getting into more and more states, and that's leading to economies and scale for the company. And remember, the underlying business model is more profitable than a brick and mortar casino because you don't have to have all the maintenance expense and the labor expense associated with running a brick and mortar casino. You don't need to have all that staff. You don't need to have the actual facility that's expensive to build and maintain. And so the profitability prospects at maturity are expected to be much better than a brick and mortar casino. That's the bullish case for DraftKings longer term. So the company highlighting that because their free cash flow is working out so well, they're making great progress. They're exploring some interesting capital allocation options, which they're going to share with investors next quarter. I wouldn't be surprised if they announced a share buyback program, or maybe they wanted to retire some of their convertible notes. So that's going to be interesting to look out for from DraftKings in the next quarter. The company saying that customer acquisition was approximately 10% higher than they forecasted in the quarter, driven primarily by outperformance in North Carolina, where their customer acquisition cost improved by more than 20% compared to the costs in Massachusetts, wow, that's hard to say, which had been live for a similar duration in March of 2023. They're getting better and more efficient at entering these new markets, like I highlighted earlier. So here's one category that in 2022, I was very concerned with. 2022 and before, I was very concerned with the industry, and that was in promotional investment. It's calmed down now, as I'm going to share with you here. But before 2022, the operators in this category were spending so aggressively on promotion that I was telling investors to avoid these companies in 2022 and before. So in this quarter, the company is saying that promotional reinvestment for OSB and iGaming continued to become more efficient year over year and improved by more than 700 basis points as a percentage of GGR. GGR stands for gross gaming revenue. The reinvestment rate also improved on an existing state basis, those that launched between 2018 and 2022. In other words, big picture, what does this mean? The operators in the industry are not spending so much on promotion and incentives and advertising and marketing. And that means less fierce competition. And if you've been following the channel for a while, you know I am basically allergic to competition. I do not want to invest in industries that are entering or becoming more competitive. I like to enter in industries like this one, where competition is easing. Everyone is pulling back. Everyone is saying, let's ease up. Like, why are we fighting against each other? The customers will benefit if we all fight against each other. Let's ease up. And the first one to do that was Penn National Gaming. Penn National Gaming, when they came into the market, they were more responsible, and they kept saying that when they were having these shareholder letters and meetings and investor updates. They kept sending the signal to the market, like, we're going to be rational. We're not going to overstep. We're going to make sure that we're doing this responsibly. And that's a signal to the other market participants, like, hey, we're not going to spend on promotions. Like, get the hint. You guys stop spending on promotions too. So let's all pull back. And so customers, when they look around, they don't have any promotions to go after. And promotions are one thing that really plague an industry like iGaming. This really hurt. If you remember a couple of decades ago, the online poker industry, it was plagued with promotional spending, and players would just go around taking advantage of the promotion. One company would offer a promotion like, if you deposit $100, we'll match your $100 deposit with a bonus. Okay, so the customer would sign up, take advantage of the $100 bonus, and then go to the next provider that offered a similar bonus. And they would go and just go around collecting the bonus. And by the time they finish doing the 5 companies or 10 companies that are available with the bonus, the first company offers another bonus. And so they do the whole swing around again. And you never get customers that are profitable because you're always only acquiring customers with a bonus. That's what I was concerned with. That's how this industry started. And now they're pulling back, and that's great news. And that's why I recommended DraftKings as a buy for 2024. I noticed the promotional pressures easing significantly, and I noticed that showing up in the performance of companies like DraftKings, which started to make huge progress in reducing the losses on the bottom line. So net loss improved significantly in the first quarter. In the first quarter of 2023, they lost $397 million on the bottom line. In this quarter, they lost $142 million on the bottom line. A huge improvement. And you'll often hear me say, I don't mind companies, especially growth companies, losing money on the bottom line, so long as they demonstrate this rapid progress. And that's what I see from DraftKings. Rapid progress towards profitability. And also on cash flow from operations, which improved from negative $201 million to negative $70 million. So still negative, but making big strides forward. I like to see that, right? And the company's trading at a forward price to earnings of 32, which is not prohibitively expensive, especially for the growth that DraftKings is demonstrating and the opportunity ahead to enter more states with sports betting and even more states with iGaming. And so the opportunity is there for growth over the next several years, and the valuation is reasonable. So I highlighted already that coming into the year, I did have DraftKings stock rated as a buy for 2024, and I'm updating that recommendation, and I'm keeping DraftKings stock rated as a buy. I'm reiterating that recommendation today on May 3rd. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.